Hi, I'm Mark King, Investment Editor at Columbia Threadneedle Investments, and here's what's in my weekly column. This week I present my monthly look at European markets, and European stocks topped off their most successful quarter for 2 years, with another month of strong gains, thanks in large part to improved economic data and receding political fears. Over the month, the Stoxx 600 index, which tracks the 600 largest stocks in 17 European countries, gained just under 3%, rising from 370 to 381 points, and this represented its highest closing price in almost 18 months. Companies in Europe also continue to benefit from the relatively upbeat view that markets around the world appear to have taken of the Donald Trump presidency. In particular, shares rallied strongly at the start of March in the wake of Trump's well-received first speech to Congress. However, following Trump's failure to replace Obamacare with a meaningful healthcare reform, there is increasing speculation that Trump may not be able to push through some of his other key election pledges. If it looks as though the president is not close to introducing tax cuts and infrastructure spending or cutting regulatory red tape, the markets in Europe and elsewhere could take a dim view of the global growth outlook. The key political events in Europe during the month were the results of the Dutch general election, the presidential campaign debates in France, and Britain's decision to send the Article 50 notification of its decision to leave the EU. A victory in the Netherlands for the incumbent Mark Rutte and defeat for the right-wing Party for Freedom was received warmly by investors. Similarly, as the pro-business candidate Emmanuel Macron performed well in the first French debate, many investors took that as a sign that the chances of Marine Le Pen becoming president of France appear to be declining. Recent history indicates polls can be wrong, but a Le Pen defeat would be a positive for markets. Article 50, meanwhile, was largely ignored by investors. It's not as if we didn't know it was coming, after all. For more on Europe and markets such as Italy, the Netherlands and the Nordics, check out this week's column. See you next week.